Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we meet with Josh Herman, the founder and CEO of CU Wealth Next, and we talk about their approach to finding and investing in new wealth management services and startups for credit unions. So if you're ready, let's suit up and get out on the field. Josh, thank you very much for joining us today, especially at the last minute. You have been an amazing partner in being able to put this together. Tell us a little bit about yourself and tell us about CU Wealth Next.
Yeah, first of all, Kris, thanks for having me. I love saying yes to things like this, so I appreciate it and glad it all worked out. So for those who don't know, Josh Herman, CEO of CU Wealth Next, and even saying CEO, I kind of cringe a little bit because Paul and I are partners in this venture. From an admin side, I take care of the CEO things. CU Wealth Next, at its core, we're a holding company, and so we take in credit union investment dollars and we place them, hopefully responsibly, in investments that we see paying off for the credits for the industry. Um, our niche is wealth tech, and so we've really narrowed in on what we view to be as green space for credit unions. And so as we pull funds in, we're very mission focused. We have objectives that we have to hit and we have to get to. So it's very much our thesis as we go through it. So CU Wealth Tech, that's core, just a holding company that collects funds and places them into the wealth tech space.
Tell me a little bit about the types of investments that CU Wealth Next is looking to make.
Yeah, so that's a good question, and it's. I hate to say this, but it's kind of been evolving. When we started this over a year ago, WealthTech. So my background, I came from Merrill Lynch, was my first job out of college. Worked on a $1 billion advising team, helped trade on the derivatives portfolio, did some annuity research, and so understanding WealthTech was the traditional side of things, and then maybe we just make it self-directed. And so my understanding of WealthTech was just self-directed investment solutions. But as we've gone through this, the whole sphere and I'm just going to call it ecosystem of WealthTech has really kind of evolved in my mind. It's gone from not just self-directed trading platforms or robo-advising, but it's also expanded to anything that is technology forward in the wealth space. To even narrow in on our thesis more, we're very focused on self-directed. We think the traditional financial advisors and cutting-edge financial advisors have the tools and have everything that they need on that side of things, and we're really looking to bring the tools that are typically reserved for the 1% and take them to the other 99% at credit unions for their members. So this thesis that we have started on the wealth tech, it's evolved to include, well, maybe we should look at this technology for self-directed. Maybe we should look at this technology for self-directed. And so it's expanded from that traditional trading platform to one of our partners is and I hope you don't mind me name dropping our partners here, but
Please.
One of our self-directed investment platforms is Investify, and Kian and his team, and they're thriving. They're doing fantastic. They're really a core anchor company for us, especially when you think of wealth tech. You think of that self-directed trading platform. Mm-hmm. Then we have Concrete, which is kind of an alternative type investment. It's self-directed fractional residential real estate. So if you want to buy as little as $5 on a residential home, you can go on Sean's platform and purchase it there. So that was a nice rounding out. And then we moved into an even earlier a startup called AIM, which is going to be enabling credit union members to pledge what I'm going to call non-traditional collateral. So if you want to pledge artwork or music, if you have something through SongVest, or even if you own stock in a company, they'll price it and allow credit unions to lend against that. Something that's typically not been available to credit union members. We recently did a partnership with Pocket Nest, which is a financial wellness company. And then we have another one that we're going to be announcing, hopefully in the coming weeks here. Attorneys have proven to be the slowdown funnel on this, but once they're done, we'll be making that announcement. So this definition of wealth tech in my mind, this is a very long-winded answer, but the definition just kind of been expanding as we see, this is a place that could complement our core thesis of self-directed investment. So yeah, it started with one thing and it's kind of evolving to something else. And there's a couple more avenues that we're looking to maybe dabble in, form
Right.
partnerships and make investments. I think insurance is one that we might need to take a look at to help round out and have a preferred partner there. But yeah, it's an ever evolving um, niche and thesis for us.
Is the vision that a credit union works with some of those providers, or are you guys kind of bundling the experience together into one deliverable that a credit union subscribes to?
That's a great question. You must work in tech. Um, It we have a two-phased approach, and I'm going to kind of not jump into the phase two right now because
Hmm.
we're still developing that. But phase one is we love our partners, we love our ecosystem, and we are an avenue that we've vetted all of these. We think that they're top tiers. We think the founders are top tier, and they can kind of solve any problem. They've dedicated their lives to solving this problem for credit union members.
Hmm.
So we very much, if someone says we need a self-direct investment solution, we have what we think is a top tier investment company for you. Let's make an introduction for you. So we're very much promoting our ecosystem. And then some of them are fully integrated. Some of them are affiliate link click out type solutions. And so some of
Hmm.
them are easier to plug in than others. So we're helping navigate that as well. So that's phase one. Phase two is going to look different. And we're looking forward to phase two.
Awesome. Awesome. Is this an answer to the credit union's challenges of being able to engage next generation members? Because I'm having conversations with credit unions all the time, and we're talking about Chime and Robinhood and these other
Mhm.
service providers. Is your collection of partners the answer to help close that gap? Is that the hope?
I actually think it re-asks the question. I think there's a question out there of what are these solutions. I just want to reframe that a little bit too, because
Yeah.
I get in trouble when I start talking about is this solely for the next generation? This is for everybody. And
Mm,
whether you're retiring and you want to do some investing, or whether you're just starting your career journey or your life, there's solutions in here for you. If you want to go the self-directed route, if you have a little bit of mad money, or if you want to start growing your nest
mm.
egg, we have solutions in there for you. Whenever I start talking about this solely for next generation, I get the email or the comment saying, "Hey, I'm older. I'm going to use this." Like, okay. This is for everybody. Um, but if I could go back and kind of reframe the question. Typically, credit unions, and that's where our focus is with the CEO on Wealth Next.
Hmm.
It's been a catch up, and I hate saying this, but you typically have. I know this is a podcast. I'm going to use hand motions. You typically have the banks at one level, and the credit unions kind of lagging behind it a
Hmm.
few years, if not a decade or so.
Yeah.
And it's always catch up, and the banks are the innovative ones. And so Robinhood exists, Schwab exists, eToro, Coinbase, all those exist outside of your traditional banking space, and maybe Schwab being the exception there. And they
Hmm.
all are trying to act like banks, and they're all trying to act like credit unions. So once you send your funds out of your credit union to Robinhood, you're going to start getting emails. I get probably get some. I'm on this call from some of these platforms saying, try out our credit card, try out our debit card, look at our fantastic rates. And their goal is to keep all your funds there. They're going to be earning interest off of those at a bank you've never heard of on their platform.
Hmm.
But it's very much similar solutions outside of the credit union space. And so I think Investify is a great answer to those for credit
Hmm.
unions, and they thrive. And if you haven't had a chance, if the listeners have a chance to use it, their credit unions that have launched with them, it is such a seamless and wonderful experience with on the crypto side, very low fees. I compared them to Coinbase um, a couple days ago. I wanted the same transaction a couple minutes apart, and it was just astonishing the fee difference that Coinbase
Mm.
charges compared to Investify that I wasn't even aware of as an owner. Um, so I think they're a great solution for that. Keeps members in your ecosystem, so that funds are not going outside of your branding. Obviously,
Hmm.
when you make an investment, it leaves your balance sheet, but they should stay within your ecosystem. So it keeps all that in house. I think that's a great answer to Robin and those. And when I say reframe the question, I think bringing in concrete, bringing in AIM, bringing in financial wellness like Pocket Nest, bringing in this part we're going to be announcing very soon. It now turns the question back on the banks and onto these other platforms. Well, now a credit union has all of these in at their disposal at their what banks would call small financial institutions, where it's a complete self-directed wealth tech suite, that it's no longer credit unions are trying to catch up. It's
Yeah.
we've now asked the question of what are you going to be doing? And Chase has seen the problem. That's why you log into Chase or Wells Fargo or Bank of America. You scroll down a little bit, you start seeing their stock trading platforms and just seamlessly integrates in their solutions. So we hope credit unions, can do that as well with our
Yeah.
solutions. But I think part of this is an answer. I think part of it is re-asking the questions.
Yeah.
Kind of your move, banks.
Great way to put it. Great way to put it. Are you taking credit union investment and then bundling that together and then making specific investments in these companies to make those services available?
Correct.
That's the idea.
Correct. And so a lot of these, we're taking ownership positions in the companies through their respective QSOs that we think are best in class. Some of it's not an ownership position. It's distribution rights to get them into the credit union space that otherwise some companies don't see the value being there. So let's convince them to put their products there. But yeah, we're definitely putting our money where our mouths are and our promotions are.
How do, speaking more broadly now, thinking about that
Yeah.
question, how do we help fintechs understand better the value of the credit union movement and the credit union marketplace for their services?
Oh, that's such a great question, Chris. It's interesting because we've taken founders that have existed outside of the credit union space, and they have this thesis about how traditional financial institutions operate, and so they operate in the banking space or compared to other fintechs, and we go pause, time out. That's not the way that credit unions operate. Um, Very much a grassroots effort, very much mission focused, mission aligned.
Mm-hmm.
And if you're that type of company, then I think the credit union space could be for you. It's been an interesting journey, but I think I have not introduced the credit union industry to one founder or one fintech who said, "Wow, yeah, no, this is a total waste of time." It's how can you help us get there quicker? Um, and we've started having these conversations with people who don't use credit unions or forget they have a credit union account. We say, "Tell us, why aren't you using a credit union?" And the answer overwhelmingly is, "Well, we didn't even know it was an option." And so
Right.
it's not that we're getting met with resistance of the concept. We're getting met with, "Well, we didn't know it was an option. This sounds fantastic. How do we get involved?"
How is CU Wealth Next as a alternative to credit unions making a direct investment to those? Is there a way that you assist them on the investment side to make better decisions? Where has that gone wrong in the past? And how does CU Wealth Next help them kind of be better at making those investments, placing those bets essentially with these startups?
That's a great question. So we do this a lot. We have experience, especially when we talk about my partner Paul Fiore. He's been doing this for decades. The master of M&A in the credit union space, and
Yes.
so when you start talking about a credit union who's looking to make their first investment, or maybe even their fifth investment into a fintech, that might have been spanned over 10 or 15 years. It's not nearly the frequency that we make investments, not nearly the frequency that we're talking to new companies. We're talking to new companies, several new companies every week, and so we know what's going on in the space. So yeah, I think that's how we can help bridge that. It's just knowledge, speaking the language of both sides of the table, driving the negotiation, and then making sure those we're partnering with are mission focused.
Yeah.
But you're asking really good thought provoking questions that are going to be staying with me for a couple of days here while I continue to think about these.
Well, I mean that's the whole point, Josh. We want everybody to come in and just get asked a bunch of questions and walk away and come back. But I had an idea, so perhaps see the comments in this episode. Then people may have some questions too.
Yeah, Josh, you're wrong. A couple of days from now, I might say, "Yeah, you know what? I was wrong."
No, it's evolving and changing. That's what it always happens, right? Tell me about how you found the fintechs that you're making the investments in. How did you discover them? Where do you go out and learn about these emerging companies? Like, how did you find these great companies and say, those are the ones we're interested in?
Yeah, so the first one was Investify, it used to be Cryptify, and where the credit union was at before, Frankenmuth Credit Union, they were going through an RFP process, and they were on the list for solutions, and it was just a company that I aligned with the founder, with the
Mm-hmm.
mission, um, wanted to know more about the credit union space, and I've developed into this person where if you find the right people, the solution can come along. And thankfully, with Cryptify now Investify, it was good from the start. I mean, so great founder, great team, great solution. So that was how I got introduced to them. It was that we were already going through an RFP process, and we just
Mm-hmm.
kind of aligned. And then these other ones, I mean, there's wealth tech companies um, all over the place, and they all have different avenues and different focuses. And it's been interesting that as I now start to dive into these apps, I have way too many fintech well, probably same as you, way too many fintech apps on my phone
Yep.
that I just constantly test, and so they're always giving me emails and all these things that kind of get a little annoying. But as I'm going through this process, I say, well, I could use this as I'm going through the process, or I could use this, and so then it's okay. Who's in this space? Let's go talk to that
Mm-hmm.
person in this space, and maybe there's some collaboration there. And there's others who hear what we're doing. I was reminded of this from one of our portfolio companies the other day. They go, Josh, you and Paul brought together 5 or 6 different wealth tech companies who believe in this vision of this ecosystem.
Mm-hmm.
I speak about and some contact us and say, hey, we love this vision of this ecosystem where we can plug into what we're doing. So, okay, 100%. Let's have a conversation and see where you complement. We don't want to overlap. But if you can complement what we're doing, 100%. So from my perspective, it's been diving in and fully embracing this self-directed investment side of things and saying, well, if I were to go see a traditional financial advisor, now what am I missing doing it self-directed? Um, and so we're going to be looking for some solutions along that as well. But it's being a user myself.
How do you think that's different from kind of the traditional delivery system solutions that we see today? And where do you think that's going in the future?
That's a great question. And I'll start by saying there's room for both. And that's very much a vision that we believe in over here. It's proving out. So if you have a Schwab account, if you have a Chase account, and you scroll down on the app, it'll say, do you want to do self-directed or do you want to call it an advisor? They see there's room for both. And credit unions do a disservice, in my belief, to their membership by only offering one. They should be able to offer both. They're very much complementary. They're not competitive. Financial advisors, the traditional side of things, very much have their role. And we're seeing this with the explosion of AI agents. People want that voice
Mm-hmm.
and that trusted source to help guide them. So there's definitely a place for that. But there's also a place where I'm sitting at a game and I want to quickly buy $20 of Apple stock. I don't need to call anybody. I don't need to run it through a financial plan. I just want to buy the equity and the stock at that moment. And I want to dabble. And I've been listening to some financial advisors on my own, or I've created my own AI solution. Help me through this. That should all be able to flow through your credit union. It's not competitive at all. And in fact, if you start with some of your members who may not be interested in the financial advisor side of things, you introduce these solutions, it could very much be a feeder program to your existing side of things. So the future to me is both, and we might even see it splitting even more, where more financial advisors lean into the tech side of things. We're talking to some
Mm-hmm.
tech companies that don't necessarily fit our thesis for self-directed, but they're making huge advancements for the financial advisors. So I think we're going to see some more advancements there. But I think we're going to continue to see more advancements on the self-directed side of things with AI solutions. Not that I'm suggesting AI become an RIA in any sense of the term. The last thing we want is that right now. But I think we should both sides continue to go. But like I said, it's in my opinion, it's our mission here. It's 100% a disservice to membership to only offer one and not offer a
Mm-hmm.
complete solution, because they'll have to go elsewhere to get the complete package.
Are you guys still seeking additional credit union investment for more credit union partners?
Yeah, so from a capital standpoint, I like our position.
Hmm.
And so we're not actively looking for it. What I am actively looking for is partnerships. The
Mm,
more credit union voices we can have at the table, the better this is going to be for everybody.
right.
We have three investors at the moment that comprise of four credit unions. Love the board, love the team. But the bigger that we can get our credit union base of voices,
Mm.
it's just the better this is going to be for everybody. So we're not looking for large dollars, but we're looking for participants who believe in the mission that want to have a voice in what we're doing.
Credit unions can use your services and work with you without being an investor in the QSO.
100%. And I love these clarifying questions. 100%. And so if you call it myself, if you call it Paul, if you email us and say we're looking at this solution, this actually just happened. This honestly just happened yesterday.
Mm-hmm.
Love this solution. I wanted to learn more about your other solutions. So we'll set up a demo with our companies. We'll facilitate all of that for you. And that way, it's not six different companies. It's which ones are you interested in?
Right.
Let's set up the demo with the best people and help facilitate that for you. So yeah, 100%.
Cool.
You don't have to be an investor. You don't have to be sitting at the table to use our services. In fact, we want every credit union to be able to access these services. So that's not a barrier at all.
That's awesome. You're going to be at GAC, I assume?
I am. I am. Yes, I'm getting rest now so that I'm ready for it.
Hydrate and get your rest now, right?
Yes, that's it. That's 100% it.
That is GAC for sure. So I'm going to change direction for you a little bit. So your background is you spent some years at a credit union as well, right? How did
Correct.
you make the decision? Because and I've had this conversation with folks, right? There are credit unions are great places to work. They're great places to build careers. It can be a little bit scary though to step out and do something that's a little more high risk, like a startup like this. Talk to me a little bit about how you made that decision to step out from here and become uh, essentially the founder of a QSO that's helping then build other fintech companies. That's not in the easy side of the playbook, we'll say.
No, no. And had I, I'm gonna not go down that road. But it's interesting. I didn't consider myself a founder until 4 or 5 months into this. I didn't consider us a startup until 4 or 5 months into this. It was literally was on the phone on a Thursday or Friday with one of the founding credit unions and said, "We're looking to do this. Do you want to run it?" I still remember where I was at. It was just dead air for a second. It was like, well, yeah, like let's do this. But it never. And this is maybe this is not the right way to do it, but I never considered the risk of it. This is an
Mm-hmm.
incredible opportunity. Um, Josh, you're up. It's your time, and let's go do this. The possibility of failure just did not cross my mind until 3 or 4 months later, and you go, "Hey, I'm the founder of a startup. You know what? This feels like it. This definitely feels like it." There's a grind to this that I was not expecting. But I say I've never worked this hard or worked this much in my life. It's not a disparagement on my
No.
past jobs. This is just it's not 24/7. It's maybe 23/7. But
Mm-hmm.
it is all encompassing. But the passion that I have for this,
Yeah.
we get the stories. And I was talking to not to divert the conversation, but I was talking to one of our founders. We're talking about the way that we're going to go. While I was on this call, the teller of a credit union emailed and said, "Hey, I'm a user of your solution. I'm talking to somebody else about it. How can we get involved?" And it's like, that's it. That is the
Mm-hmm.
mission of why we're doing this, because it's not even hitting the one person. If we're just out there to hit one person, we're a scam. I'm sorry, but that's we're
Yeah.
a flash in the pan. This has the potential to have generational impact,
Mm-hmm.
one person at a time. And that's exactly what we watched play out with this individual. Teller on the front line wants to start investing, does start investing, loved it so much, goes and tells somebody else, brings their friend back and says, "Hey, how does this person now get signed up?" That's it. And it's not about profits. It's not about ego. It's not about pumping up somebody else. It's about
Mm-hmm.
generational impact. And if we can touch 1 million lives, At first level contact, imagine the impact this can have for generations to come, and credit unions across the country can be a part of this.
Yeah. That's motivation that'll get you out of bed on Monday morning and put your jersey on. You know,
100%.
I tell people that, a startup is sometimes like raising a child, right? Which is years of hard work for moments of glory.
That's
That one time
exactly.
they do the thing you're supposed to, but that feedback, right? That feedback is what you want. That positive reinforcement that your efforts are being rewarded in the results that you're seeing, right? Not necessarily in dollars and cents and things like that. It's hard work, but it's rewarding work.
You're absolutely right. I'm going to start reframing it that way too, because I have a 2-year-old that might be screaming while we're on this podcast. But as we're on here, I'm seeing the outlook number go up at 2, and it's like the startup baby's crying too.
Yeah,
I love
that's exactly
I
right.
love that framing. I love the framing.
And it does take your entire family. That's one thing that you can have a job that you're passionate about, that you're engaged in a credit union, but rarely does it affect your family, right? And when you're a founder and startup leader, it affects your family. Like my family knows you work every day of the week, Saturday and Sunday too, right? That's part of it. And they've been amazingly accommodating and everything else. So that's something I think if you make that leap, you have to be prepared for.
100%. Yeah. And again, it wasn't anything that I had considered when I said yes. And so
Right.
I don't think it doesn't change the decision at all. 100% love it. Um, but yeah, those just weren't things I weighed when I said yes. It was fantastic opportunity. Love the mission. Let's go.
Mm-hmm. Awesome. As somebody who is a founder and somebody who works with founders, what advice would you give them on kind of being successful, how to get the company started, how to take an idea and build it into something new? What kind of advice would you give startup founders?
Hmm. That's a really good question. Um, and I only hesitate because I'm still new at this too. I mean, I hear 100 plus pitches a year, but I'm still new at this too. So I can tell you what drives me and what
Mm-hmm.
attracts me to other founders is mission focused. And it sounds cliche, it sounds redundant. I say it all the time. But if we can align on the mission, um, that's a very good premise for our relationship and a very good premise for your company. Now, sometimes you have to check your mission.
Mm-hmm.
Is this still valid? Did I miss something here? Do I need to refine it? Um, but my advice to founders would be find your mission. And you know what? I think this is a really good question because this is what, to your point, this is what drives me every morning is understanding what I really enjoy doing, what I view, my mission is, what brings me joy.
Mm-hmm.
And there's a lot of executive coaches on YouTube talking about finding your why in those things, and I think there's something to that. And so if you're a founder who's looking to make a quick buck, not mission focused, it doesn't align with your personal brand or your personal mission. Um, you might be successful, but you're not going to be all in. Whereas if you find what you think is this is what I'm here to do is this, will align very well. And I think to your point, it does turn into that 24/7 time to start making sacrifices type thing because
Yeah.
this is 100% worth it. So yeah, I think find exactly what you think you need to be doing and take time to do that, and then go for it. Um, and I think you'll find that what you would define success would follow after that.
Really great advice, man. Really great advice. Well, listen, Joshua, I really do appreciate you coming on. Thank you so much. If somebody's interested in learning more about CU Wealth Next or some of your companies that you're making investments in, how should they find out more information?
Yes, we're all over LinkedIn. We have a LinkedIn landing page. We have a brand new website that looks fantastic. cuwealthnext.com. And you can reach out to us at info at cuwealthnext.com. We'll be at GAC. We're going to be at Nacuso Reimagine coming up. Kris, I met you last year at GAC. Looking
Mm-hmm.
forward to seeing you again. But this was such an honor to be on here. I've seen some of the guests that you've had on here. It's an honor to be on here, honor to talk to you. So
Oh,
thank you very much. I appreciate it.
You really did great, man. Thank you very much. Have a great day. We'll see you soon.
Thanks, Kris. You too.
This podcast is sponsored by Constellation. We're empowering community financial institutions with innovative digital solutions, powered by Fintech, driven by your roadmap. Join us as we navigate the future of digital banking together. For more information on how we can be your partner for digital transformation, visit www.constellation.coop.
I really do appreciate Josh joining us today. If you enjoy this content, please like and subscribe on your platform of choice, and we will see you next time.